Relative volume. What is it? Why is it important? How do you use it? Let's talk about it. So relative volume, or RVOL for short, this is the amount of volume a stock is trading compared to a predefined look-back period of 20 to 30 days typically. You need to understand that it takes volume to move a stock. Now, if the stock doesn't have volume, or even if it does have volume, but it's not high relative to what it normally trades, you can't expect the stock to make a huge move. Okay, the support, resistance, the levels people are putting their orders at, if it's average, why would you think that it's just going to blast through one of those levels today if it doesn't have the volume to do so? Most of the time, relative volume is used in the stock selection process. I use it every day on every single stock selection process I go through. And what I look for is a stock trading at high relative volume. And to me, this is 2 times, preferably 5 times or more, its relative volume, the average volume that it trades. It's got more potential to make an extreme move, which presents predictable opportunities for day trading. Keyword predictable. When a stock has a lot of volume, one of the things that this does is it starts to overwhelm the algos, right? Sometimes there's an algo. Let's say there's an algo out there and it's programmed to, chew up day traders. And what it does is it buys the new low, right? So whenever there's a new low on the day, this thing buys it up. So you go short as it goes to a new low and you stop out on that. And they know this. They know where your stop is going to be. They're going to hunt for that after that low breaks. And then that algo then made its profit and it can walk away knowing that it slapped you, right? Well, when you have a lot of volume, a lot of relative volume, it's not going to be able to absorb all those orders and it's going to let it go and just go further and further, and you can ride continuation on that. It's just one of the setups here I happen to talk about right now. It's a huge advantage, all right? And volume is going to help with the predictability factor because it gives such clear market structure signals. You're going to have very clear swing highs, swing lows, where the pivots are. It's all going to be so clear for you to draw on the chart that you can trade off these levels knowing, the next thing here, knowing that it can provide the liquidity needed if you need to get in or out with any, with a sizable amount of shares. So if you're trading, 2, 3, 4,000 shares, you want to know that there's enough volume, that it's liquid enough that you can just get in and out without incurring a ton of slippage, right? And a way that you could do this is by looking at relative volume and understanding that, hey, when this is very high, there's going to be tons of orders out there at each level, and the spread isn't going to be very big. So you don't have to account for that, and you can kind of size up on this stuff, all right? So this is one of the first things I look for in a stock is relative volume. If it doesn't have at least 2 times relative volume, I don't even consider it. Okay, and what I mean by this is if you see on the gap scanner, there's a stock, it's up 20%, but it's up on like 20,000 shares. First of all, not enough volume to meet my requirements. Second of all, that's not going to be a high relative volume stock. And if it is, then I still don't want anything to do with it. If you're looking at a stock that says, say, 5 or 10 million shares traded, and this happens a lot with these dollar stocks, $2 stocks, 90-cent stocks, where there's millions of shares traded because they're so cheap per share. But that doesn't mean that that's higher than average, right? That could be average for the stock. You don't know. You have to look at the RVOL. Later in the day, relative volume is very important to look at. So if you're trading off of a scanner, if you're in a chat room, which, be very careful in chat rooms, and you see people typing in tickers, or you see someone's trading a ticker, you need to pull that stock up and know if the relative volume is high or not, all right? Because if it's not high, then nothing extreme or great is going to come out of it, okay? Just know that. Relative volume is also a great indicator for position sizing. The higher the relative volume, the larger a position the stock can typically support without having to worry about liquidity concerns or slippage, like I said earlier. Guys, volume precedes price. If you want the stock to make a big move, it's got to have a lot of volume, right? Volume is what moves the stock. The stock is not going to sit there with 0 shares traded and move at all. It's going to literally sit at the exact same price until volume or people start trading the stock. One of the things that this RVOL helps with is volume profile. I get my conviction to enter a trade based off of the volume profile or the volume that the stock is showing for the candlestick bar. This is getting a little bit deeper into technical, chart reading and everything. If there isn't high relative volume, first of all, the levels are not going to be as clear as they should be or could be. And second of all, there's not going to be really good looking volume patterns and profiles and shapes that give me the conviction to actually get in and size up in a trade. All right. It's going to just look kind of bland across the board. Maybe you get a high spike here, high spike there, but there's not going to be those really clean, strong, large volume ramps that are just going through levels, like level after level. And let's say you don't use volume like that and you just use your price action only. Well, with high relative volume, because there's so much volume happening, when the stock does a pullback and marks support and takes off, you now have a clear level to work with. Okay, I know it seems a little scary when you're in these stocks that are moving crazy like that, but I can tell you this is the most predictable situation you can be in, is when the volume is very high. And that's a huge edge. It's a huge edge to have. And if you can only filter out stocks and get down to the ones that have the highest relative volume, they've got the best catalysts, which is usually going to come along with high relative volume, you're positioning yourself well enough that if you can execute on what you're seeing, you're going to be profitable for that day, most likely. Obviously, the stock could go against you. Something can happen. Headline could come out. But with high relative volume comes predictability, comes volume profiles, comes the ability to overwhelm algorithms. Well, relative volume can actually help with this because it has so much more volume than usual coming at it that it's going to be overwhelmed and just let the price go. It's not going to be able to hold up all those shares, okay? This is kind of like a trading with the herd type mentality, right? If you can find the high relative volume, you can find where the herd's at, you trade in the direction they're trading, and you can have a really high probability situation occur. And that's all we're looking for. All we're looking for is the highest probability setups, and we execute on them. That's it. All right? And those come with high relative volume. I hope I've helped you out here. I hope you've learned something. I got one more thing to show you, and I'm going to take you down to my computer screen here. If you use eSignal, which I'm not sure any other place this is available, if you use eSignal, you'll notice on this watch list right here, you can type in something called Zenger volume ratio, right? Zenger is the name of a guy. He's made a lot of money in the market, and he made this volume ratio thing. What it's going to do is you can load this up with names, and it will immediately show you what the relative volume is on the stock. For instance, on Friday, EA had a relative volume of 445. That means that it's 445% more volume than usual. All right, now maybe this is calculating from, the after hours or whenever, but I'm just showing you that that's what it does. And if you throw this on your watch list, anytime you have a name and you type it in, like, right now, markets are closed, so this is going to say something like dry up, see dry up. Okay, so this is not high relative volume. And you can kind of use that as a quick little filter if you have eSignal. I hope you learned something. I hope you kind of learned what RVOL is, kind of learned that it's important. You need it. This is something that you want to look at. This is definitely the type of stocks you want to gravitate towards in your stock selection process. It's just one of those things you got to check, man. It's one of those things. I hope you guys got value from this. Like, subscribe, let me know. Write in the comments if you want me to do a video on something else. Please let me know. I'll definitely do it as soon as I possibly can. You guys stay green, stay disciplined. Peace.